to Roxham TV. I'm your host, Shami. We've got a packed show for you today because the worlds of macro, AI, geopolitics, Bitcoin, and even the future of the universe are all colliding in some pretty fascinating ways. We'll start with the Federal Reserve. So today we have the decision of the Fed of not lowering rates. The Fed left rates exactly where they are. The real story was Kevin Warsh's first major press conferences as the new Fed chair, and his message was very different from what markets have grown accustomed to over the last decade, I would say. For years, investors have looked to the Fed for guidance. They wanted hints, they wanted signals or roadmaps, and maybe sometimes reassurance. But Kevin Warsh seems to be telling markets something very different, which is to go figure out yourselves. So we'll break down why some analysts believe the famous Fed put might be fading, what that means for investors, and why this could mark one of the biggest shifts in market psychology in years. And speaking of the Fed, we'll also have to look at what happened to gold. Gold prices fell sharply after the meeting as investors suddenly began pricing in the possibility of another rate hike later this year. We'll explain why gold dropped, why the US dollar surged, and why some traders are now trying to understand what a Kevin Warsh Federal Reserve really looks like. Then we head over to France, where leaders at the G7 summit are discussing something that might be even more important than tariffs, trade wars, or maybe even AI itself, being critical minerals. The raw materials needed to build EV or semiconductors, AI infrastructure, batteries, and defense systems, because increasingly, the race for the future might not be about who builds the best technology, it might be about who controls the materials needed to build that technology in the first place. Then we stay on the AI theme. According to Reuters, the US has delayed blacklisting Chinese AI companies, so DeepSeek, and more than 100 other firms that were reportedly flagged as national security concerns. We'll look at why Washington is holding back, why DeepSeek has become such an important player in the AI race, and why AI policy is becoming just as important as AI innovation. After that, we've got a story that honestly feels like a science fiction. A humanoid robot in South Korea learned how to walk, learned how to run, recover from pushes, and even perform K-pop dance routines after just 7 days of training. But the most important part isn't the dancing, it's the fact that the entire platform is open source, and that raises a very interesting question. Could open source robotics do for robots what open source software did for the internet? We'll discuss why this might be a much bigger story than it appears on the surface. And finally, we're going to end today's show by zooming all the way out. And when I say all the way out, it means beyond markets, beyond AI, and beyond Earth itself, because scientists have just reaffirmed one of the biggest discoveries in modern physics. The universe is still expanding, and not only it is expanding, it is accelerating. That means something we still don't fully understand appears to be shaping the fate of the entire cosmos. So we talk about dark energy, why scientists remain so fascinated by it, and why some humanity's biggest unanswered question might still be waiting for an answer. So anyways, we've got a lot to unpack today. So we're talking about the future of monetary policy, the future of gold, the future of AI, and maybe even the future of the universe itself. So make sure you hit the like button and subscribe if you're new here, and let's dive straight into the first news of the day. So one of the biggest stories coming out this week is Federal Reserve meeting, and it wasn't the interest decision itself. So the rates stay unchanged, and it shouldn't be a surprise after all. So the real story was what happened during the first major press conference from new Fed chair Kevin Warsh. So here the message was quite different from what investors have become used to over the past decade. So in simple terms, he told markets, so don't expect me to tell you exactly what comes next. And that might sound like a small change, but it could have huge implications for the market. So for years, investors have relied quite heavily on the Federal Reserve, and when markets fail, traders expected the Fed to step in. So when growth slowed, investors looked for hints about future rate cuts. Many investors become used to the idea that the Fed would help smooth out every bump in the road, and that's become known as the Fed put. That belief if market got into trouble, the Fed would eventually come in to rescue. But what's different about Kevin Warsh is that he appears less interested in giving markets a detailed roadmap. Instead of telling investors exactly where rates are going next, he wants markets to focus on the data. So, focus on the economy, focus on the inflation data, jobs market, and also productivity. Not every sentence coming from the Fed. And honestly, that is a big shift because investors have spent years trying to predict what Fed will do next. Now, they might have to rely more on their own analysis. And as of course you know, like market do not like uncertainty. When investors have less guidance, price can move around more. Stocks can become more volatile, bond yields can react more sharply, and investors might have a harder time predicting future policy. And that's why some analysts think markets could become more unstable in the short term. But there's another side to the story, of course, like supporters saying that this approach they actually argue that markets might have become too dependent on central banks. For years, many investors focused less on company fundamentals and more on guessing what the Fed might do next. Kevin Warsh appears to be pushing back against that mindset. His argument seems to be quite simple. So, markets should be able to handle normal volatility without expecting the Fed to step in anytime soon. In other words, investors need to focus more on business quality and less on central bank support. One interesting part of the discussion is, of course, AI. Like, one thing people are trying to figure out, even with relatively high interest rates, which we are in the current state, the United States economy has remained surprisingly strong. So many people are asking why though? Well, many analysts point to massive investment in AI. Companies are spending billions on data centers, on semiconductors, cloud infrastructure, power systems, and also AI software. Those investments are helping support growth even while rates remain so elevated, and that gives the Fed more flexibility. If the economy remains strong, policymakers don't need to rush into rate cuts. So, in the past cycles, high rates often slow growth quickly. This time it looks different. AI spending is creating jobs, is creating investment and demand across multiple industries. That doesn't mean every AI company will succeed, but it does mean the economy might be more resilient than expected. And that's one reason that the Fed feels less pressure to immediately ease policy. Of course, there is another major variable being oil price. So if Middle East tension returns and oil prices spike higher, inflation could become a problem again. That would give the Fed a reason to stay hawkish. But if the U.S. and Iran peace agreement, basically the agreement still holds, and oil prices continue falling, inflation pressures could ease significantly, and that could completely change the market's expectations. In other words, the future path of interest rates might depend just as much on energy prices as it does on economic data. Well, I think this biggest takeaway for the first Kevin Warsh SOMC, like the Fed might be moving away from being the market safety net. Like investors have spent years asking, what will the Fed do next? The better question going forward might be which companies can succeed even the Fed doesn't rescue them. Because in this new environment, quality matters more, cash flow matters more, and profits matter more. And strong businesses might stand out even more if markets become less dependent on central bank support. For years and for investors, like that could be the biggest change of all. The era of following every Fed hint might be fading, and the era of focusing on business fundamentals might be making a comeback. All right, so speaking of the Fed, of course, we have to touch upon on the gold price. So gold's price moved sharply lower today after the Federal Reserve left interest rates unchanged, but signaled that another rate hike could still be coming later this year. At one point, gold fell more than 1% as investors reacted to Kevin's latest projections and the first press conference from the new Fed, so Kevin Warsh. And honestly, it wasn't really about what the Fed did. It was about what the Fed might do next. So the Federal Reserve, as I mentioned, kept rates steady, unchanged at 3.5% to 3.75%, which was exactly what the market expected. But when investors looked at the Fed's projections, they saw something important. 9 out of 19 Fed officials now believe another rate hike will be needed before the end of the year. That's a much more a hawkish signal than many investors were hoping for. As a result, traders quickly adjusted their expectations. Before the meeting, markets saw around a 60% chance of a rate hike in December. After that meeting, those odds jumped to nearly 80%. And of course, that's when gold started falling. So one of the biggest reasons gold sold off is because the USD moved higher. When interest rates are expected to rise, the dollar, so USD, often becomes more attractive to investors. And when the dollars get strengthened, gold usually faces pressure. Like you might ask, why, Jamie? Well, that's because gold is priced in dollars. A stronger dollar makes gold more expensive for buyers around the world, which can reduce demand. So while many people focus on gold itself, today's move was really driven by the bond market and the currency market. One thing that stood out is that Kevin Warsh pushed back against the Fed's hawkish projections. The Fed is not in a hurry to cut rates, and if inflation remains stubborn, another hike is still on the table. What's interesting is that gold has two major forces pulling it in opposite directions right now. On one side, the US and Iran peace agreement has reduced geopolitical fears that normally hurts gold because investors feel less need for safe haven assets. On the other side, there are still questions about inflation, about oil prices, and the future path of interest rates. And now the Fed has added another layer of uncertainty. So gold traders are trying to figure out which story matters more. Is it the peace deal in the Middle East or a potentially more hawkish Federal Reserve? So I think today's move tells us something important. For most of this year, investors were focused on geopolitics, focused on oil price and inflation. But after today's meeting, the focus has shifted back to the Federal Reserve. The market is now trying to figure out, like, understand what a Kevin Warsh Fed looks like. For now, one thing is clear. The era of easy money is not coming back anytime soon, and gold investors are being forced to adjust to that reality. All right, so that is a quick update on the whole macro scenario around the world, around the Federal Reserve, and also around gold price. We'll take a short break from here. When we come back, we still have more global news around the world. So this time we are talking about G7. So this week is the G7 summit in France. That is a very important topic people are talking about, being critical minerals. So people and basically a lot of the Western countries are pointing fingers to China, having too much pressure around critical minerals. So if you guys want to know the details, make sure to stay with us after the break.
The This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. Now we have to talk about one of the most important stories of this week. So this week is the G7 summit in France. So when people think about this summit, they probably think about big headlines. So for example, US around peace talks, the war in Ukraine, and global security. But behind the scenes, there was another topic that might end up being even more important over the next decade. So, being critical minerals, because increasingly the countries that control these materials may also control the future of technology. So, critical minerals are the building blocks of the modern economy. They are used in EV, they're used in batteries, some smartphones, AI data centers. So, in other words, if you want to build the technologies of the future, you need access to these materials. And right now, one country dominates much of that supply. So, of course, that being China. So, China is is already like the world's largest producer of rare earth minerals. Last year, China produced roughly 270,000 metric tons. Compare that to around 51,000 tons in the US and much smaller amounts elsewhere. But the real advantage comes after the minerals leave the ground, because China also dominates the processing and refining stage, and that's where things get interesting. So imagine Canada discovers a new mineral deposit, or maybe Australia opens a new mine, or Africa increases production. That sounds great, right? But what happens next? In many cases, those raw materials still need to be processed and refined before they can be used in batteries, electronics, or defense systems. And much of that processing capacity is located in China. So even if other countries build new mines, they might still depend on China to turn those materials into usable products. And that's the challenge Western governments are trying to solve. So, leaders at the summit discuss ways to reduce that dependence. The concern is quite simple. So, when one country controls a large part of critical supply chain, it gains enormous influence, not through military power, not through sanctions, but through economics. If supply becomes restricted, prices can rise. And if prices rise, manufacturers suffer. And industries that depend on those materials become vulnerable. And that's why officials are talking about diversification. The goal is to build alternative supply chains before a crisis focuses on them. So, in many ways, this reminds me of what we have seen with semiconductors. A few years ago, most people never thought about where the computer chips come from. Today, governments around the world treat semiconductor production as a national security issue. Critical minerals might be heading the same direction, because without these material, many of the technologies we talk about every single day simply can't be built. So think EVs, think AI hardware, robots, defense systems. All of them rely on these supply chains. So the United States has proposed creating a group of countries that would cooperate on critical minerals, but not everyone agrees on how that should work. So some allies want closer cooperation. Others worry about trade policies and national interests. So while leaders are discussing solutions, there is still no simple answer. Building new mines might take years, building refineries takes years, and building the entire new supply chain can take decades. Well, I think the biggest takeaway is this. So the next global competition might not even be oil. It might not even be AI models, and it might be about raw materials that make modern technology possible, because whoever controls the minerals controls much of the AI infrastructure and ultimately controls a key part of the global economy. And that's why this conversation at the G7 matters. It isn't really about rocks at the bottom or in the ground. It's about who controls the foundation of the next industrial era. All right, so here is for rare earths. But speaking of the AI race, we have to talk about the two countries that absolutely matter. So the US and China, in terms of the AI race, just took another interesting turn. So, according to a new Reuters report, the US government has delayed adding Chinese AI companies, so DeepSeek, and more than 100 other firms to a major trade blacklist. And that's surprising because many of these companies were reportedly approved for blacklisting months ago. So, the obvious question is, why hasn't it happened yet? Well, so if you've been following AI, you've probably heard of DeepSeek for sure. Like the company grabbed global attention last year after releasing powerful AI models at a much lower cost than many Western competitors. Its success shocked the whole tech industry, and it raised serious concerns in Washington about how quickly China's AI capacities were advancing. But DeepSeek isn't just another AI startup. US officials have previously raised concerns about the company's ties to China's military and intelligence sectors. DeepSeek, of course, has denied wrongdoing, but the concerns remain part of the ongoing debate. So, in terms of the blacklist, like the blacklist being discussed here is called the entity list. Think of it as a trade restriction list. If a company is placed on the entity list, American firms face major restrictions when selling technology, software, or equipment to that company. For many Chinese firms, being added to the list can make it much harder to access advanced US technology. And that's why getting added to the list, it is a big deal. And that's why people are paying attention to this delay. So, according to Reuters, the Trump administration might be trying to avoid increasing tensions with Beijing. Remember, like the US and China are already competing across several fronts, competing on trade, AI, semiconductors, rare earth minerals, and national security. So, adding dozens of Chinese companies to the blacklist right now could make those tensions even worse. So, some officials appear to be taking a more cautious approach. So what's really happening here is, I would say, is a part of a much larger technology battle. For years, the US has used export controls to slow China's access to advanced technology that includes AI chips, chip making equipment, and advanced software. Meanwhile, China has been investing heavily in its own technology ecosystem, its own maybe AI companies, its own semiconductor industry, and its own supply chains. Both sides are trying to reduce dependence on each other, and AI is now one of the biggest battlegrounds. One concern raised in the report is, of course, like some companies that were flagged as security risk are still able to access American technology. According to sources, some firms allegedly helped move restricted AI chips into China. Others were reportedly linked to military-related projects. Critics argue that delaying blacklist updates could allow more advanced technology to reach companies that the US views as strategic competitors. And that's why some former officials are warning that national security concerns might be taking a back seat to broader trade negotiations. So the challenge of Washington is that every action comes with consequences. If the US tightens restrictions too aggressively, it risks escalating tensions with China. And if it doesn't act, critics argue that valuable technology could continue flowing to potential rivals, and that's the balancing act policymakers are trying to manage. So, which is to whether protect national security without triggering a larger economic confrontation. So the biggest takeaway is this. The AI race is no longer just about building better chatbots. It's becoming a geopolitical competition. We are seeing governments treat AI models, chips, and computing power the same way they treat strategic resources, almost like oil, energy, or military technology. The question is no longer just who builds the best AI, it's who gets access to the technology needed to build it. And this DeepSeek story shows the AI policy is now becoming just as important as AI innovation itself. All right, folks, so we'll take a short break from here. When we come back, of course, we are not going away and we have to talk about the combination between AI and also humanoid robots. So there is a new breakthrough in terms of humanoid robots coming from South Korea. Well, that is not like the major point. The major point is that the robotics, humanoid robots are becoming open source. So that is the part that got my attention. So if you guys want to know the details, make sure you don't go away after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. We now have to talk about humanoid robot because if you've been watching the show, you know I'm really into technology like this. I do believe that is the future. So what's new is that South Korea might have just given us a glimpse into the future of robotics. So a new humanoid robot, so take a look at this. The name is called like AI Sapiens, so KO. It has learned how to walk, run, and keep its balance, recover after being pushed, and even perform some K-pop dance routines. So here's the crazy part: like it learned all of that after just 7 days of AI training. So this robot you're seeing is the, so if we could show the screen very quickly, so trying to play a video here. So that is the dancing robots from South Korea, so AI Sapiens KO. The robot was developed by a South Korean company, so the name is robotics, so very easy. So instead of training in the real world, the robot first learned inside a virtual environment using NVIDIA's Isaac Sim platform. So we quickly skip to that part. So basically, think of it like a video game. The robot practices millions in simulation, makes mistakes, learn from them, and gets better. And once the AI figures things out in the basically in the virtual world, those skills are transferred into the physical robot, and that's how it was able to learn complex movements very quickly. So, like the system basically combines several different technologies. It uses reinforcement learning, where the AI learns through trial and error, and it uses human motion data to understand how people move. It runs on, obviously, once again, like NVIDIA computing hardware, and it uses a new generation of motors developed by the company, so robotics. Put all of that together, you get a robot that can move in surprisingly natural ways. But like honestly, the whole dancing part it isn't the most important part of the story. Like for years, some of the world's most advanced humanoid robots have been built behind closed doors. So think about it, like Tesla has Optimus, Figure AI has its own robot, Unitree has its own thing, but most of the software or hardware or training systems are kept private. But this one from South Korea, they are taking a different approach. So, robotics, or being a company, plan to release the hardware designs, the software, the simulation tools, and even the training resources. So that means researchers, universities, startups, and independent developers can all build on top of the platform. So I would say like the robot dance videos are becoming pretty common these days. So I'm not very surprised that a robot can dance. Like we have seen Tesla's Optimus dance, like Unitree doing the kung fu or backflips. We have seen plenty of impressive demos. But the real question isn't whether robots can dance. The real question is who gets to build them. And that's where this project stands out. Instead of a few giant companies controlling everything, an open source platform allows thousands, maybe even millions of people to contribute. Developers can improve the software, researchers can test new ideas, startups can build new products, and innovation can happen much faster. So just think about what happened with software. So open source software helped power the internet. Then open source AI helped accelerate machine learning. Now we might be seeing the same thing happen in robotics. If humanoid robots become open source, development could speed up dramatically. Instead of a handful of companies building the future, you could have builders all around the world working on the same technology. This story isn't about a robot dancing to some K-pop. It's about who gets to participate in the robotics revolution. Because if open source robotics takes off, the future of intelligent machines might not be controlled by a few tech giants. It could be built by millions of developers or engineers, students, and entrepreneurs working together around the world. And that could end up being far more important than just some dance you are seeing today. All right, so that is the latest update from humanoid robot side. Moving on, I do want to shift gears to, well, this story of the day is not about finance, it's not about AI or tech. I do want to zoom all the way out and talk about our universe, because like if some of you guys know me personally, I'm actually a huge fan when it comes to the space or universe or aliens. So there's one story I find it very fascinating. So here we have news from Reuters, like researchers at the University of Southampton in England have released a new study confirming that the universe is still expanding at a very accelerating rate. So now that might sound like something straight out of a science fiction movie, but this is actually one of the most important discoveries in modern physics. And it all comes down to a mystery that scientists still cannot explain. Something appears to be pushing the universe apart faster and faster. So, what happened is that, like last year, a controversial study made headlines by suggesting that maybe the universe wasn't accelerating after all. If that had turned out to be true, it would have been a huge deal because it would challenge one of the foundations of modern cosmology. Some researchers even suggested that dark energy, which is like the mysterious force believed to drive the expansion of the universe, might not exist. Naturally, that got scientists' attention. So researchers went back and took another look at the data. So here's what they found. So this study, what they call is the type EL supernovas. So don't worry about the name. Like think of them as giant exploding star that scientists use as cosmic measuring tools. Back in the late 1990s, these exploding stars helped researchers discover that universe wasn't just expanding, it was expanding faster and faster over time. That discovery completely changed our understanding of the cosmos and eventually won the Nobel Prize. So the team re-examined multiple sets of observation to see if the original measurements were wrong. And after reviewing the evidence, they found no sign that the earlier results were flawed. The conclusion was quite simple. So the universe is still accelerating. So what does this say about dark energy, right? So here's where things get pretty strange. So scientists believe a mysterious force, so called the dark energy, is driving the expansion. The only problem is that nobody knows what the dark energy actually is. We can see its effect, we can measure what it's doing, but we still don't know what it is made of or where it comes from. According to the current estimate, dark energy makes up about 68% of the entire universe. Like, think about that for a sec. Most of the universe appears to be made up of something we don't fully understand. So when people hear about space exploration, they often think we have figured out like most of the big questions, but honestly, that is not true. Like scientists still do not know what dark matter, what dark energy is, and they still don't know what what the universe was made up of, and they still do not know what ultimately happens to the universe in a very distant future. In many ways, we are still quite early in the chapters of understanding how the cosmos actually works. So, researchers around the world continue collecting new data from powerful telescopes and space observatories. So, future projects could completely reshape our understanding of the universe. It's possible that decades from now, we might discover that dark energy is something entirely different from what we think today. But for now, the evidence still supports the standard model of cosmology. The universe is expanding, and that expansion is speeding up. Well, I think what makes science so fascinating, like sometimes the most important discoveries aren't answered yet, like they're questions. Right now, something appears to be influencing the fate of the entire universe, something powerful enough to push galaxies further apart over billions of years, yet nobody knows exactly what it is. And if scientists eventually solve the mystery of dark energy, it could become one of the greatest scientific breakthrough in human history. So, because like I would say, understanding what is driving the expansion of the universe might ultimately help us understand the universe better itself. All right, so I would say this is the perfect end of the show. So this is the story that I chose to end today's live stream. But like before we wrap up the show, I do have to share a quick personal message. So today marks the final full daily analysis show that I'll be hosting here on Roxham TV. Now, next week, we still have a few fantastic guest interviews coming up. So you definitely want to stay tuned for those. But after that, Roxham TV will be taking a short break as we prepare for the next chapter. So just to be clear, that doesn't mean the great content stops. Actually, far from it. The London studio will be carrying the torch going forward. So bringing shows and fresh perspectives. So make sure you are subscribed to the channel and keep an eye out of everything that's happening here on Roxham TV team. As for me, I just want to say thank you, like serving this community and sharing these stories with you guys every single day has been a true privilege. Like whether you've been here since the beginning of Gems and Crypto or Roxham TV, or you just recently found the channel. Thank you guys for spending part of your day with us daily. Thank you for watching. Thank you for your support, and thank you for allowing me to be a small part of your Bitcoin journey or macro journey or AI journey. I also want to give a very special thank you to the entire Roxham TV crew. Like behind every live stream, every interview you see, like every graphic, there's a team that has worked incredibly hard over the last 2 years to bring this show live to you guys. So what viewers see on screen is only a small part of the effort that goes into making all of this happen. So to everyone behind the scene, a true thank you to you all. And finally, this is not a goodbye. Like it's simply the beginning of a new chapter. And I'm excited to see where this journey takes take all of us next. That being said, I'll see you guys next week for our upcoming guest interviews right here on Roxham TV. Until then, take care of yourselves, stay humble, and as always, thank you guys for watching.